Hello all, welcome to this week's live session. It's been a bit of a quieter week, it feels like, over the last 7 days or so. But there's still some interesting stuff out there. We've got, just this morning, I don't think it's quite got there yet, but we had the German stock market, the DAX, was near to pushing out to fresh all-time highs. It had a look earlier on this morning, and it's sort of faded so far. In the US, it's been a strong week so far. It's been a positive week after a bit of a sort of flat end to last week, and I think there are some things to watch out for in the next couple of days. For me, primarily, will the S&P? We'll have a look at the NASDAQ and everything else as we go through, but will it take out those old highs from the 20th of May? So over the last couple of weeks, it's been a bit flip-flopping up around these levels. So there's bits to watch. So as usual, if you're new to this, welcome to the live session. We do this every Wednesday at 12:30 UK time. And it's just a catch up with what's going on in major markets and a look out to where the opportunities might be. So let's just do some housekeeping before we start. So my name's David Jones. Let's just go through the risk warning. Spread bets offered in the UK only and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 85.24% of retail investor accounts lose money when trading spread bets and CFDs with this provider. Make sure you should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. All information that is provided during this seminar is for educational purposes only. The presenter is not a financial or investment advisor and is not authorized to provide recommendations on any instrument of any kind as part of this presentation. The strategies showcased are applied on hypothetical scenarios. Any instruments that are mentioned throughout are cited only for illustrative and educational purposes. The webinar is not intended to be a personal recommendation or an offer to buy or sell any financial product or instrument and must not be construed as advice from the presenter. Capital.com does not represent that the material provided here is accurate, current or complete and therefore should not be relied upon as such. Any information that might be provided relating to past performance is not a reliable indicator of future results or performance. To the extent permitted by law, in no event shall Capital.com or any affiliate or employee have any liability for any loss arising from the use of this information provided. Any person acting on the information does so entirely at their own risk. Okay, we've done that. Let's get into the markets. I'm trying to think. What have I traded since? I bought the NASDAQ last week, and that was against me for a bit, but that's gone the right way so far. If we take a look, let's have a look at one of the old favourites, gold. I bought gold last week as well. It had a good start to this week, but it's been a bit sideways since then. So it's always an interesting market. Of course, clearly it's been almost the perfect storm year for gold, as I've said before. We've had economic uncertainty, political uncertainty, falling stock markets, falling US dollar, and it's been a great year for gold. It last hit an all-time high in April, 22nd of April. Since then, it's all been a bit sideways. But obviously that big trend is up, but you can see, there we go. That's the last, month, 6 weeks on gold, all a little bit sideways. I bought the dip somewhere in here. So it might even have been the week before last, or maybe it was halfway through last week. So I bought the dip. It went in my favor, went against me, and it had a big-ish move at the start of this week, and it's been sideways since then. So I'm still long gold. I think if I wasn't in the trade, I'd probably wait and see, is there going to be a sell-off? If we pick up on the most recent trend on gold, it is a bit of a struggle because it is all a bit sideways, but it perhaps looks something like that. So I think if we saw gold dip back to maybe the low 3300s again, perhaps it's a short-term trading opportunity. But you can see on the hourlies, it's not been the most exciting market. Actually, lots of markets have been not that exciting over the last couple of weeks, but I think gold perhaps more than anything. But we do have, going back to the the middle of May lows, so three week lows, 3 weeks ago, we do have the market has been recovering. So for me, the trade I would do, I'm in it already, but if the market sold off, I'd look to be a buyer again, and I would want my stop the other side of last week's low, 32.45, so about $100 lower than where it is now. Let's see if it sells off and if there is an opportunity there. So that's gold. A bit boring the last few weeks, but it can't be exciting all the time, can it? And it has had a heck of a year. Gold closed last year at 2,620, and here we are, $700+ higher. So it's about 25%. Is that about right? Yeah, something like that, isn't it? Up 25% and maybe a bit more for the year so far. So interesting to see if we see that come under a bit of pressure as the week goes on, and maybe there's an opportunity there. But let's take a look at stock markets. Let's start off with the S&P 500, so the broader US stock market. And you can see this is on the daily chart. So for the last couple of weeks, it hasn't been the most exciting market, but I think it's an interesting couple of days ahead, because we've got it's back up near these highs, like I said, around about 6,000. Do we get the breakthrough 6,000, continues the recovery that's been in place since the April lows, and we go back to have a look at the all-time highs, wherever they are, from late Feb up above 6,100. So I think that's an interesting market to watch this week. Like I said, I'm long the NASDAQ. We'll take a look at the NASDAQ in a minute. But for me, I'd still be a buyer of the dip. We had a sharp move last week on, what's it called? Taco Thursday, wasn't it? Where Mr. Trump rode back a little bit on his latest tariff proposals, rallied, but it gave it up again pretty much straight away. And it's all been a bit sideways since then. The lows from the 30th of May, for me, that's an important level. If it did sell off today and I was looking to buy the dip, I'd be thinking about stops below there. But we've had a week so far of just the market steadily recovering. So, yeah, that's it. So I still be advised. I just saw a question there. What are your thoughts about this market? I always hear that markets do not like uncertainty. And despite having tariffs, the market is still rallying. Yes, it is. Do you think this is market manipulation? No, I do not buy into any of that conspiracy theory stuff. When it comes to big markets, like US stock markets, it takes a lot. It would take a lot of money to manipulate a market for an extended period of time. When we had the uncertainty over tariffs, we had this massive sell-off from 61.50 down to 4,800. We had a 20% sell-off in stock markets. And as some of those tariff proposals have been reduced, we've seen the market recover. I think there is still a lot of uncertainty out there, though. We've seen a bounce back in this market, even more so in European markets, with the DAX at all-time highs. But I think there's still a lot of potential uncertainty out there. But for now, the market does seem to be taking it in its stride. If you thought, for example, well, look, the wider stock market is being far too relaxed about the uncertainty of tariffs, then where we are now pretty much is an ideal place to go short. If you thought, well, actually, these tariffs are going to come back to bite the market again as the year goes on, then selling short with a stop above the all-time high on the S&P in this example is one thing. But I don't overthink stuff like market manipulation and all of that. I think there's always a theory about why a market is doing X, Y, or Z. And ultimately, if we're trading though, our job is to try and make money from the market. And for me, one of the easier, I would never say easy, but easier ways of trying to make money in the market is to go with the trend, and the trend since April has most definitely been up. So for now, I'm happy to be a buyer. But I do wonder what the rest of the year is going to look like. It wouldn't surprise me. Where are we now? June. So we're not quite halfway through the year, are we? So we've still got almost 7 months of this year left. It wouldn't surprise me if the market was 15% higher or 15% lower than where it is now by the year end. I think there is still an awful lot of uncertainty out there. But for me, I just go with what the market's doing. And clearly since those April lows, the market's been recovering. So I want to be long, but I do think that the next test for US stock markets is what happens if it gets back up to the all-time highs. Yeah. So I think that will be interesting, and maybe we'll see that over the next week or so. You could say an argument for building a negative case, just purely sticking with the charts, is taking the view, this is the RSI, this is the 10-day RSI down here. The market has pushed a little bit higher, but the RSI is falling. So this is classic example of bearish divergence, where perhaps the market is running out of momentum. So that's something suggesting that perhaps, the rally's run far enough. But let's see. But for me, it's still strong. So for me, I'm happy to buy the dip. But let's see what happens. Let's take a look at the NASDAQ. It's a similar story with the NASDAQ. We've got the old all-time highs from mid-February. If we pick up on those, up at wherever it is, 22,270. So, only 500, 600 points away from where the market is now. So 2%, 2.5% away from where the market is now. The market is still strong, like the S&P. I bought it. I bought the NASDAQ last week. Where did I buy it? In here, I think. So I bought it there, and then it did fall off a cliff. My stop was the other side of 21,000. I think it was 29.50. My stop, it was down there somewhere. So it came close to my stop, but I didn't take it out. And now it's bounced back. So I'm in the trade and sitting with it to see what happens next. I think, again, it'd be interesting. These highs from last week, these out of hours highs around 21,800. So 100 points higher than where we are now. But for me, that trend is still up. So let's see. But I like I say, I'm going to repeat myself, aren't I? But it's those old all-time highs. What happens up here? If we saw the market, US markets break out to fresh all-time highs, that's normally considered a positive sign. So all very interesting to see what happens with these US markets. If we look at the DAX, let's just tidy this up a bit. So the German index, let's flip this over to a daily. Here we go. So it was we had the old all-time highs for the DAX were in whenever it was, March. There we go. Around about, let's call it 23,500. The market broke through those in early May, and it has gradually pushed its way a little bit higher. It's 700 points higher than those old all-time highs. So for me, a market that's making all-time highs is a positive market. So I'll be a buyer of the dip. It's a bit scrappy over the last week or so, but I'd absolutely be a buyer of the dip. The only question, as usual, is where does my stop go? And I think, what's the date today? 4th of June. So these are only yesterday's lows. So yesterday's lows are about 400 points lower than where the market is now. So if I was a buyer now, I'd want my stop below yesterday's lows, if not below, what's that, Monday's low, 2nd of June lows. So for me, on the DAX, I'd rather buy a sell-off. So I think it's interesting if it sells off. But look at that trend. What has that done since those lows? Those lows were around 19,000, and here we are above 24. So that's 25% move off those lows in April. So afternoon, David, do you think the DAX will go higher? CRWV thinking of shorting. What's CRWV? I think it's going to go higher because it's strong. But if you wanted to go short, again, a bit like the S&P or the NASDAQ, there's an obvious line in the sand. There's these out of hours highs around 24,400. The market's trading at 24,250. So if again, a little bit like that, the S&P and the NASDAQ, if you thought, well, this recovery has been massively overdone, there's still a whole load of uncertainty out there, and going short, there is, with a stop above those highs, for me, the trend is up. It's been up since April, and it's still, look at all the green candles. It's quite rare we get a down day, and of course that's not going to carry on forever, but for now, the momentum, for me at least, is still to the upside, even though it's been perhaps a bit of a scrappier week or so. And if we look at the FTSE, I mean, the FTSE, it's pretty much, there you go, pretty much the same, isn't it? The FTSE is always, the UK FTSE is always a bit of an odd market. Again, that's been pretty sideways for a week or two now. The old all-time high for the FTSE is up there from beginning of March. So again, are we going to see it? So you could absolutely. There's always. I always say with markets, it is never clear cut. I don't think there's ever a single argument to say, oh, you definitely have to be a buyer or you definitely have to be a seller. You can always construct an argument for going long or short. And the argument on stock markets for going short, the likes of the FTSE, for example, and the US indices, they haven't taken out the highs from earlier in the year. So are we just seeing, since April, an extended dead cat bounce where the market rallies up and bang, down back we go again? I'd say at the moment the recovery is still strong, so that's why I'm still buying the dips. But you could absolutely make that argument from a longer term perspective. That look here, actually, here's a good example. When was that? Feb 23. So the FTSE traded up to 8,000, sells off in March 23 to 7.2, so drops 10%, bounces all the way back, doesn't take out the previous high, and then eventually drifted back to the lows again. Are we going to see the similar thing here? Who knows? But for me, in the short term, the recoveries are still strong. But I would be, if I was thinking about shorting, I'd be watching in the US markets those old highs, and the UK markets the old highs from earlier in the year. So it's interesting, an interesting mix of things going on there. Let's take a look. What should we look at next? Oil. I was long oil last week, and I came out of it. Where did I buy it? I bought it in here somewhere, and then I came out of it 29th of May there, and I should have bought it again, but I didn't. I saw somebody asked about oil. It's all a bit sideways, isn't it? Again, if you look, there are quite a few markets like this at the moment that are all a bit sideways, But if we look at this is since the 23rd of April, so we're 6 weeks into this for oil. The high is on Capital is about just below $65. The low is down around 55. So it's a big range, $10 range since like the end of April, and then a tighter range again over the last 3-4 weeks or so. So for me, it's just hanging around in the middle, not doing anything oil. So the argument here is, okay, you could go short because it's near the top of the range again. The top of the range is about $65 a barrel. It's trading just below 63 at the moment, so go short with stops above that. Or wait till it to drop to the bottom end of the range and be a buyer. But it's a bit directionless, oil at the moment. On the dailies, you can see on the dailies, you could absolutely make the argument, well, the trend since the Russian invasion of Ukraine 3 years ago, that trend is still down. We've got lower highs, lower lows. We've had a downtrend this year since whenever, middle of Jan. So it's all, and look at it, it's currently trading where it was on the 4th of April. So we've had 2 months of not a lot going on with the oil price. So, there's the argument to be long or short. I think at the moment, for me, I'm not going to do anything. It just needs to make its mind up. And it's just a bit too range bound for me, oil. I think if it breaks 65, it'll be interesting. So if we had, a $2.50 rally, $2.50 a barrel rally from where we are now, I think that starts to look interesting because then it looks as if it's perhaps breaking that downtrend that it's been in for much of this year, so that looks a bit interesting. But you can see just on the daily chart, it's a pretty quiet-ish market, isn't it? So, not too much more to say about that. Natural gas, again, pretty similar. When was that? March, natural gas traded to its best levels since December 22. So we had a 2-year plus high for natural gas. This level on natural gas, around about 290, has been an important low since November last year. Whenever we've seen it knock back to that level, the buyers come back out. But then again, look at it now. It's all again a bit flat, isn't it? Just a bit rangy, natural gas more recently. So I'd rather be a buyer than a seller, but I'd rather buy a dip rather than sort of buying it here where it's just hanging around in the middle of its recent range. So yeah, not too much exciting for me on that one. And if we look at some of the currencies, again, it's a bit the same. Actually, do you know what let's look at Palladium first, because that was an interesting market. I missed the buy in Palladium. I was thinking about buying it, and it moved before I bought it. So, but I still buy the dip. But again, big picture for Palladium on the daily chart, it's all a bit boring. Okay, this is going back just over a year. It's all a bit sideways. There we go. Go back a bit further. So that's back to December 23. So we've had, a year and a half of a big sideways range in the price of Palladium. But we have had a half decent trend on the hourlies. There we go. Going back to April. And it was here. End of last week, I was thinking, I might buy Palladium this week. And I sort of took my eye off the ball a bit and I missed it. But we have had a good trend in Palladium from the April lows of around 880, rallied up to 1040, dropped back, and we're back up again. So for me, if it drops back, it's an interesting trade. The trend has been up in that time frame. So I'd buy the dip and I'd put a stop under 930 or something like that. So I've sort of missed it a bit this week, but let's see. But again, bigger picture, not that interesting. But let's take a look at some of the currencies, and you see this is another a little bit boring. This is pound against the dollar. So because we had some dollar weakness, we did see the pound trade to its best levels since here. Where was that? Feb 22. So we had a 3-year high for the pound against the dollar earlier this year, and that trend is still up. That big trend is still up for the year so far. So where did it come into this year, the pound? So it came into this year trading around 125, and here we are at 135. So we've had a 1,000-point move on the pound. So about, I'm trying to do the maths in my head, 7-8% move for the pound this year against the dollar. So again, I'd be a buyer of the dip on that, but the volatility, as you can see, has just sort of dried right up in recent days. So, and you can see it there on the chart, just how sideways it's been over the last few days. So everything is just, lots of things are just a bit sort of hanging around, not doing very much. So yeah. What else is there? I think, let's have a look at Bitcoin. Let's have a look at, bring up the chart for Bitcoin. Because that's another one. It hit all-time highs, Bitcoin, in just the other week, wasn't it? Here we go. 22nd of May, and there's been no follow through. It's just dropped back. So again, it goes back to saying you could make an argument to be a buyer or a seller. You could take the view, okay, that break through 110,000 by Bitcoin was a false break, and the market's going to sell off back to 75 down here. Or you could also take the view, well, it's a sign of perhaps Bitcoin starting to probe higher. Me, at the moment, I'd probably rather be a buyer than a seller of Bitcoin. If we flip it over to the hourlies, again, it's been a bit flat for the month so far, but on the hourly chart, this is what the trend looks like since those April lows, down around 75. It's fallen out of that trend again, but I would take the view, I'll be a buyer and put a stop at least the other side of 100k. So again, there's the breakout to fresh all-time highs, but it's just drifted. So yeah, it's the story of so many markets in recent weeks. Just not an awful lot going on. I'll take a look if there's any stuff you want looking at. If you put it in the chat, I can see a few people have put it in already. So we'll have a look at those in a second. And if someone said, can we talk about feature requests on the platform? You can certainly put it in there, and I'll pass it on to the people at Capital who deal with that. So what's interesting to watch? Well, I still think stock markets, yeah, because we have had this strength. We've had the German market up near its all-time highs. Is it going to break out? And the same for the US. For me, with the US markets, do we get the break this week? It's the non-farm payrolls on Friday, isn't it? It's the US employment numbers come out this Friday, so that'll be interesting. But do we break? Do we break out to fresh all-time highs during June? Or is the market going to stall again up here? So that's perhaps the more interesting thing to watch for me in the short term. Like I said, I'm long the NASDAQ. I've moved my stop on the trade, and I'm going to sit with it just to see does it manage to squeeze back up to these all-time highs, about 400 or 500 points higher than where we are now. But yeah, it's been a bit quieter in recent weeks, but then we have had, as we know, something of a crazy year, haven't we? We did have a bit of a mad first 3 or 4 months in markets, particularly stock markets. Can we have a look at CRWV pumping on the NVIDIA deal? CRWV. I've got no idea who they are. We'll have a look at NVIDIA as well. I can't spell it. WV. Oh, CoreWeave. Okay, CoreWeave. So look at those. Oh, wow, that's doing amazingly well, isn't it? Let's take a look at that. Let's add it into our little charts list. Hold on. Let's take a look at that. And what else do I want to look at? I want to look at NVIDIA as well. There's CoreWeave. So let's flip this to the dailies. Wow, that's amazing, isn't it? So the problem I always have with these ones that go absolutely nuts is where do you put your stop? But that's gone from, that only came to the market end of March by the looks of it. Or maybe we only started covering it at the end of March. I don't know, whatever. So it was $40 end of March and $150 today. So yesterday I should say. So yeah, let's say you were a buyer. Where's your stop going to go? I don't know. I mean, for me, I probably want the stops to the other side of 100, and the stock is trading at 150, and that's only from a week ago. The lows from a week ago. I mean, that's a big stop, isn't it? It's like a 30% plus stop on the trade because it has been so volatile. But I mean, it was a strong finish yesterday. That's a really interesting one. Let's come back to it next week and see where it is. But you can't deny the trend in CoreWeave there, can you? What's NVIDIA done? Because NVIDIA had earnings last week, didn't they? But I don't think they did much on them, did they? See, there's an argument again for going short NVIDIA, isn't it? If you thought, I mean, NVIDIA, clearly has had a brilliant couple of years. 2023 into November 24 was the last time we had the all-time high, really, up at 153. So if you thought that big trend is absolutely still up on NVIDIA, but if you thought perhaps the NVIDIA had been overextended, let's say, then going short with the stop above those all-time highs, the stop above 155, is one idea. I'd rather buy the dip. This is, the hindsight trade was the sell-off, obviously in early April, back towards that trend line. But again, interesting to see what happens with NVIDIA up here. But that CoreWeave has had a great run. The only problem I'd have, and it's a big problem, is where would you put the stop? So and mine would need to be quite far away. Ethereum, let's have a look at Ethereum, someone said. Same as last week, isn't it? We looked at these last week. I remember looking at these now, and I remember saying I'd go short. And if I'd have gone short last week, it's pretty much where it was last week. So yeah, it's just not very exciting for me. We've got these old highs left from earlier in the year, around 2,860 or thereabouts, and it's just hanging around, isn't it? It's just boring, isn't it? Ethereum. So, and you could argue there's a couple of ways, as ever, going back again to the theme for today. You can always argue to be a buyer or a seller. So you could take the view, well, right, it's broken out of the downtrend that's been in place since December, so I'm going to buy it. Absolutely fair enough. I would take the view maybe it's a false break and it's going to go back to 1,400. I think both views are valid, and we'll only know with time, won't we? But yeah, it's a bit dull, isn't it, Ethereum? Okay, I thought it would help to have the asset table on the trade page be always live. It seems to stop syncing after a few minutes. Okay, that page there, trade. Oh, my portfolio is empty. Let's bring up most traded. Okay, I will pass that on to the guys who are in charge of this sort of stuff. So thanks for that. What is the most traded? Gold, NASDAQ, Ethereum is the most traded. Oh, there you go. Bitcoin, Ripple, crude oil, Dow, natural gas, Tesla, and the DAX. Okay. Let's have a look at Tesla. Is it just a bit boring since it's recovered a bit, hasn't it, since he came back? Yeah, there's the Tesla chart. It's back. It was interesting, wasn't it? We had that move in Tesla, obviously after. I mean, we saw a big move in U.S. stock markets anyway after the election, the U.S. election last year, and then it came all the way back again. And this old 200 level in Tesla has held. So yeah, that's interesting. Do you think the dollar will recover on the basket? I think that's interesting. I thought it was going to. The dollar basket, the dollar index. Where is it? I must have it here somewhere. There it is, dollar index. I thought it was going to recover. This is another one where it could go either way, and it's not actually doing anything. So this is the dollar basket. So the dollar against a basket of 9 different currencies. I can never remember the breakdown, but Google it if you're that interested. But it's always a good way of looking at the strength or otherwise of the US dollar. And look at the dollar. Since beginning of this year, the dollar's been in a slide and it's still in that downtrend. So you could absolutely take the view, right, the dollar is weak. I want to be a seller of the dollar. And if I was going to sell it now, I would want my stop at least above these highs, 101.50. But you could also take the view, well, we had a breakdown. It broke a big level, that dollar index. That move through these old lows, July 23 lows, it traded down to its worst levels since March 22, so the 3-year low in the dollar. But there's been no real follow through off that. So that you could take the view there, well, is that a false break? And if you thought it was a false break, be a buyer with a stop under that low from April. So I think it's interesting, but again, I think for me anyway, the jury is still out on that as to which way the dollar's going to go. And you can, and this is one of the reasons why lots of markets are a little bit boring at the moment. Many of the currency markets against the dollar, because we're trading pretty much sideways. We're trading now where it was about 6 weeks ago. So yeah, interesting to see how this all resolves in the dollar. But for now, yeah, just have to wait and see. So that's it really for today. So the interesting markets for me are stock markets, I think. Does the S&P and the NASDAQ have a look at the all-time highs? Does the DAX, the German index, break out to fresh all-time highs? Everything else is perhaps a little bit rangy. Gold has had a good run, good start to the week, and that trend is still up. So I'd be a buyer of the dip on gold. So that's interesting if we get a bit of a deeper dip. And then on Friday, we've got the US employment numbers, the non-farm payrolls. So that might make things a little bit interesting as well. So that's it. That's it for today. So thanks for coming along. We'll do it all again next week, 12:30 UK time, next Wednesday, and see how these markets are trading then and whether we get a bit more volatility. So until then, good luck with your trading and hopefully see you next Wednesday.